Hello, and welcome back to your South King County Real Estate Update. My name is Sarah Eggleston with Stone Egg Realty at John L. Scott, and I am back to deliver your real estate news for the week. Let's go ahead and jump right on into it. Today is July 29th, 2022, and let's find out what happened this week. So Seahawks schedules are in. If you want one, please let me know. These are going to go out in the next week or so. Let me know how I can get one to you. And what happened this week? So each week I have a meeting with a group of realtors out of my office that we help each other share wins, help each other through losses. Earlier this year, it was all complaints about, I can't find anything for my buyer. I can't get my buyer's offer accepted. Those sort of things were the struggles that people were seeing. Now it's shifted to my listing is sitting. What am I doing wrong? Why is it not selling? And the market has shifted super fast. I've heard it called one of the quickest market shifts in history. So things are sitting on the market a little bit longer in most markets. There are some micro markets that are still real hot that are getting multiple offers. I had a lunch with another broker yesterday that she was getting ready to review multiple offers with her seller. So that it depends on the price point, the area, how in demand the property is. But overall, if we look at the larger average, we are seeing a decrease in buyer demand and seeing houses sit on the market a little bit longer. And let's go ahead and jump back on into these slides. This was probably like the big headline that came out this week. Fed unleashes another big rate hike in bid to curb inflation. They did another really hefty 3/4 of a point raise, which is something that normally they do like 1/4 of a point at a time. So seeing 3/4 of a point 2 times in a row is pretty significant. The Fed chair has expressed mixed signals about the bank's likely next move. So he's saying that there is a possibility of smaller rate hikes going forward, but he hasn't ruled out another 3/4 of a point rate hike because inflation is still much, much, much higher than they would prefer it to be. This is a chart going back past the Great Recession. So these are Fed hikes, key interest rate hikes. And heading into the Great Recession, they had to decrease the rate significantly. And we stayed low for a very long time past 2015, 2016. We start to see them do hikes again, but they're very small. And then the coronavirus hit. And so we went back down to zero here. And now this has just skyrocketed. You can see there's no other time where it's skyrocketed that quickly in the last, 15 years or so. Most recent inflation data showed 9.1%, which is the fastest annual rate in 41 years. And this has really started to affect consumers. They're starting to cut spending with the high gas prices. Maybe they have to commute, so they have to spend money on gas. So maybe they'll cut costs in other areas of their life, not go out as much or buy more affordable food, just finding ways in their budget to cut prices. So we are starting to see that, which we weren't at first when the inflation numbers came out. We saw really high consumer spending still. So now we are seeing that reel back in. And on Thursday, the estimates for GDP from April to June period, some economists think it may show that the economy shrank for the second straight quarter. So this is oftentimes a key indicator of a recession, but some economists say that it wouldn't necessarily mean a recession had started. During those same 6 months when the overall economy might have contracted, employers added 2.7 million jobs, more than in most entire years before the pandemic. Wages are also rising at a healthy pace, with many employers struggling to attract and retain enough workers. I'm sure you've seen now hiring signs in restaurant windows, shop windows around town. There are a lot of open jobs out there, but they're having trouble attracting workers. The other part that the Fed has to debate is how high should they raise borrowing rates if the economy is decelerating. Weaker growth, if it causes layoffs and raises unemployment, often reduces inflation on its own. How the Federal Reserve's rate hikes affect your finances. This was a much longer article, but I just took the housing bit from it. I'm considering buying a house. What's happening with mortgage rates? So mortgage rates are much higher than they were a year ago, but they have started to level off. That's because mortgage rates don't necessarily move in tandem with the Fed's increases. Sometimes they even move in the opposite direction. Long-term mortgages tend to track the yield on a 10-year Treasury note, which in turn is influenced by a variety of factors. These factors include investors' expectations for future inflation and global demand for US Treasuries. So there's a whole lot of factors affecting mortgage rates coming into play here, but we'll get a little bit more into the rates in just a second. Will it be easier to find a house? Sales of existing homes have dropped for 5 straight months, while new home sales plunged in June. So we are seeing prices continue to rise with the number of home sales dropping off pretty significantly. There are more options available. This is nationwide on average, and some towns have more options than others across the nation. But if you're interested in this article, I recommend you go check it out. Even if we are headed towards a recession doesn't equal a housing crisis. So home prices do generally stay pretty darn solid during a recession. It's a great way to hedge against inflation. There was only 2 recessions where home prices decreased. In 1991, they decreased just a small amount at 2%. And 2008, they did decrease significantly, but that's because the mortgage market kind of crashed the economy. So it was housing the cost at that time, and there's rules in place to prevent that from happening going forward. But throughout history, during a recessionary period, interest rates go up at the beginning of a recession, but in order to come out of a recession, interest rates are lowered to stimulate the economy moving forward. Historically, we have seen a repeated uptick in interest rates followed by lowered interest rates. So if you are able to go forward and purchase a home right now, we do expect interest rates to drop in the future. Right now, there's a lower demand, so you'd have less competition going in, fewer bidding wars, lower prices, not getting bid up as high over list price, or there's even offers being accepted below list price right now. I know, mind-blowing. It's been so long since we've had that. But if you are able to go buy a home right now and in the next couple of months, I do recommend doing that still, because you can get that deal. And then when interest rates go down, you can refinance and take advantage of those lower rates at that time. And we do expect home prices to increase going forward. They expect the year to end 9.3% December to December. So last December compared to this December, 9% increase, and then between 3 and just over 4 heading forward for the next few years. And that brings us to our Market Stat Minute. We had 823 new listings, 796 pendings, and 657 sold. So you can see our new listings kind of tanked. We had way fewer listings this week than we did last week. The pendings are actually staying pretty steady, but they are below where our new listings are. And if we bring it to our local area breakouts, Federal Way, new listings and pendings are neck and neck. They're completely equal. Kent has more new listings than pendings, but Renton and Auburn have fewer new listings than pendings. So if you are looking to purchase a home, Kent may have a few more options for you compared to the demand in the area, compared to Renton and Auburn, where it looks like demand has picked up. Last week, we had a 5.54 interest rate for our US average mortgage. And this week, we have ticked down to 5.3. So with rate hikes, I know it's counterintuitive, but interest rates have gone down even though the Fed raised the key interest rate. But like I said, there's a lot of things that affect mortgage rates, and it more follows the 10-year yield. So there's some signs that we are headed towards a recession, some signs that say we are not. We'll see what happens going forward. But I mentioned a minute ago that the most recent inflation rate was 9.1, but the producer price index, that is the producers of the products before it gets to the consumer, their prices rose 11.3% year over year. So that has a sign that there may be some higher prices coming to the consumers, because if producers are experiencing higher costs, they'll pass that on to the consumer. And if we bring it to today's interest rates, we are at 5.13, so down again. This is something that we are kind of seeing interest rates level off. They shot up and now they've started to tick down. I expect we will see a leveling off of interest rates going forward in near future. And if you are planning on making a move this year, please reach out. I would love to share one of these buyer or seller guides with you, or both. Just let me know which copy you would like and how to get it to you so I can send it over. And one last plug for the Seahawks schedules. Give me your address as soon as possible, and I will get one out to you in the next week or so. Thank you so much for joining me. If you have questions, please feel free to reach out. My phone number and email address are on the screen there. And I'd love to have that conversation with you about the real estate market in your area or an area you're interested in moving to. So thank you so much for joining me. I will be back next week at 3 p.m. with your local real estate news for the area. Have a fantastic week.